Mesdames et messieurs, bienvenue à Saint-Tropez. Winston is here too. And what are we talking about? Well, if you were kind of shocked by Friday and what happened after the Fed speech there, you might be even more shocked in the middle of next week. And I think it's important you understand what that's all about. And that's what Winston and I are going to bring you here in this video. So what's happening? Well, the Fed is warning that they're going to keep rates higher for longer. That's point one. Number two, they are saying it wasn't really us. We blame governments. There was a paper ad from Jackson Hole meeting essentially blaming loose fiscal policy for half the inflation. Now, if you go back 2 years, I remember distinctly the Fed being rather welcoming and rather open to all the money printing and sending out checks to every Tom, Dick and Harry out there. It seems they've changed their tune and they want to blame somebody else for it. So that's point number two. But what should you actually be worried about in the middle of next week? Well, what you should be worried about is job openings are out in the middle of the week. And what does that mean? Well, it's an indicator of the job market and the labor market that is very, very quick. Because if you as a company think the economy is going to slow down, like Winston's slowing down here, where are you, little bear? There you are. Then what you're going to do is you're not going to fire everybody immediately, because for that you're going to talk to legal and everything else, and that's going to take you ages. But what you can simply do is pull all of your job ads off the website and you're done, right? And that's what the big tech companies have already done. That's what a lot of businesses are doing. So therefore, the job openings tell you very, very quickly whether or not the economy is slowing, whether the labor market is getting tighter. And if you have watched Jay Powell's press conferences, the one number he's most obsessed with is this 2-to-1 ratio of job openings to unemployed people. So he doesn't want there to be 2 available jobs for everybody who's unemployed. And he wants that to, he has never said a fixed number. In fact, he was asked about it and he said, well, I'm not going to give you a fixed number. Instead, what I think, look at these beautiful houses here. What he's probably looking for is something like a 1.5 or something like that. So if we are getting substantially less available jobs being open, then that's going to be an amazing thing for the stock market, because the Fed doesn't have to do as much. If job openings stay flat, then that's another kicker in the groin of us short-term investors. So that's what I wanted you to watch out for. I also wanted to enjoy everything in between. Winston and me, here he is, say have a beautiful day and see you very soon, I hope. And before you go, make sure you watch this one video, the next one here on the screen, to make sure you really understand what's going on with the Fed and what's going to dominate the market the next couple of weeks.